crypto consolidates after recent volatility. Altcoins underperform as investors' confidence takes a hit. Realized and implied vols collapse under the weight of DOV selling, but put skew holds a bid. All this and more in this week's Crypto Insight. So crypto this week, Bitcoin's been consolidating, right? Obviously we had the bloodbath that we mentioned last week, the Terra Luna mess, and markets have just kind of been settling. The dust has been settling slowly, right? And you know, unfortunately though, even though we had a bit of a risk asset bounce led by equities into Friday evening and Monday, crypto couldn't really participate in that bounce, right? So you can see here, crypto, like Bitcoin, kind of chopping around, not really getting any meaningful bounce, certainly not in the context of how much it's sold off, right? So that's really just sort of signaling there that investor confidence in the space has been dented somewhat, right? Which isn't surprising, right? When you get $50 billion of market cap wiped out in a week in tokens that were arguably in the top 10, it's going to impact confidence a little bit, right? So that's kind of to be expected. Now, if we look at the technicals, I'm still looking for a bounce towards, if we can get an equity bounce of some sort of length of maybe a few weeks at least, then we've got a shot at getting up to 33K as a minimum, and then maybe even 38 as a maximum. I would say that's your kind of potential range if you are going to get a fourth wave bounce after that brutal third wave sell-off. Okay, so whenever that fourth wave is over, and to be fair, it could be over already. I doubt it, but it could be. Then the next leg down is the one, you know, with the bigger move. And that's potentially for me targeting around 20K would be a sensible target, given what we think the downside is in equities. Crypto is probably going to be in line with that to some extent, basically, right? So that's kind of my base case at the moment. Waiting for a pop to kind of that area around 33K, maybe even, you know, somewhere in the middle, 35, 38. And then looking to put on a bit more size in terms of hedges and protection trades, right? I still got a few hedges on, but they're quite low conviction hedges. They're not really, you know, proper hedging me all the way down for a big crash. Looking to kind of enter those in a bit of a bounce, basically. So that's kind of what I'm seeing in terms of Bitcoin. Yeah, I mean, here we've got the kind of stablecoin assets, and we've got the total value locked in DeFi, basically, right? In the major sort of DeFi protocols. So you can see, you know, as the dust is settling, we have seen, you know, stablecoin assets fall by about 8 to 9 billion since early April. Again, you know, a lot of that is money coming out of Tether. As people got nervous about a potential peg break there as well. And, you know, this capital is probably left, it's probably fled at the asset class, right? Because traditional bond yields have also risen, are looking more attractive now. So maybe some of that money is kind of then going back towards TradFi because there is a bit more yield for it to hunt there, basically. And if you look at the DeFi platforms, the big protocols there, total value locked, it's kind of halved across all the major protocols. Obviously, Curve took a big hit because that was where all the Luna stuff was going on. But, you know, everything taking a bit of a hit there, basically, right? So, you know, that's kind of, again, to be expected. It's definitely been, it's definitely hurt the space, definitely kind of affected the space and the growth of the space, I guess, the speed of that growth. But the market's going to heal, right? The good thing about crypto is it's survival of the fittest, right? You know, the weak go to zero, and the strong will rise again, basically, right? That's what we saw in 2018, 19, and we're going to see it again, right? I suspect. So just kind of, I wouldn't completely give up on the space, but just kind of be careful about where you put your money. Don't get puffed into people saying oh, look, I can make a 20% risk-free return on this stable coin because that is not risk-free. It's clearly been proven, right? So just be careful out there and size your allocations according to the risk. And make sure you're in a position where if it all goes to pot and it all goes to zero, you don't have to sell your house. Yeah, that's what I would say. All right. And then lastly, I would say altcoins have kind of been underperforming, obviously, as you would expect. So whilst ETH hasn't really fallen out of bed, you can see here that ETH underperforms slightly, but that's been pretty stable against Bitcoin. But you look at the likes of Solana and AVAX, I mean, they've been getting hit a bit harder, right? They've kind of underperformed by an extra 5 to 10% over the last week relative to the big boys. So, again, kind of makes sense, right? That the further you are down the risk curve, that's where the real sort of nerves are. This phantom token, the one outlier, is actually up quite a bit. That's obviously a bit more sort of specific there. I believe there's a developer known as Andre Cronje, I don't know how to pronounce his name, coming back to the project. He left a few months ago. He took a big hit. He's coming back to the project. That's the idiosyncratic risk. The thing rips 40% on that news and it's starting to fade back again, basically. So these things are pretty choppy and pretty volatile based on random news flow like that. So that's why I don't get involved in stuff like that, right? If a headline like that can move the thing 40%, I probably don't want to be involved, right? But like I say, ETH, Bitcoin, not really moving. Still waiting for the major catalyst. Apparently there's some news. Vitalik was saying merge is going to happen in August. I'll believe it when I see it. But in general, sometime in sort of Q3, Q4, that's the expectation. And that's what option markets are kind of looking for, which we'll discuss a bit later on. Yeah. Okay. On that note, that's it from me on the technical update. Over to Aaron for a bit of on-chain stuff.
And so, basically, Glassnode was kind of saying similar things as to what Imran was pointing out, where it does seem like there's a bit of less confidence in the space, a lot less demand, less interaction. So starting off with this chart on the top left, basically what you're seeing here is these kind of blue shadow here is showing the drawdowns or the profits for Bitcoin. And on the bottom side, you have this turquoise line is showing every time it's hit minus 30% on a monthly return. And then the deeper green line underneath is when it gets down to minus 50% on a monthly return. And so you can see all the way on the right, showing the most recent move down to that minus 30% monthly return, effectively making it where Bitcoin's basically lost 1% every day for about the last month. And the other notable thing with this chart here is you could see that infrequently we've seen these drawdowns to minus 30% to this turquoise line, but they are often associated with a deeper move to the minus 50% area and usually coincide with start or ends of bear markets. Moving on to the next chart, the top right, we have the same monthly return chart, but for Ethereum, basically pointing out that Glassnode was pointing out that there's still a deep correlation between Bitcoin and ETH. You've seen a lot of similar price action, even though with slightly underperformance from ETH this past recent weeks and months, with also getting down to that minus 30% area, but going a little further than Bitcoin to minus 34.9%. Again, they really use this to highlight that there's still a very strong correlation between Bitcoin and ETH, despite these kind of deep fundamental differences where Bitcoin's HODL, store of value, and Ethereum is meant to be built on and kind of a blockchain to be used. And then so with that, they kind of tied the relationship between Bitcoin and ETH through this Bitcoin dominance chart here down on the bottom left, which is specifically looking at Bitcoin's market cap to Ethereum's market cap. And they basically use this as to say, when flows are going into Bitcoin, the space is getting a little more conservative. They're going less risky. And when flows are going out of Bitcoin and into Ethereum, it tends to be more risk on further down the risk curve and when you could expect flow to be going into the altcoins. And so they kind of showed on the chart here, you have the price for Bitcoin and ETH in this orange and blue, and then the black shadows show kind of the flow. And so when you get into this big area up towards the green, that's when Bitcoin dominance is fully intact. And then down to this pink or red areas when ETH dominance is fully intact. And so as you go from Bitcoin into Ethereum, it tends to be end of a bear, start of a bull, and then the opposite for when Ethereum's going into Bitcoin, end of a bull into a bear. And so you can see we recently went Bitcoin to ETH, and now we've been diverging back from ETH into Bitcoin, kind of pointing further to what Glassnode has been calling a bear market since roughly summer last year. And that kind of further points to this last chart in the bottom right, basically just showing that demand for block space in Ethereum has really kind of dwindled and dried up recently. They've had an all-time low in the amount of ETH burned. So when they implemented EIP 1559, every time there was a transaction, there was a burning of ETH. And so that's hit all-time lows, down to roughly 2,000 ETH being burned per day, already off 50% of what it was just at the beginning of the month. And just kind of showing that this, potential source of constant and new coins hitting the supply at a time when demand is actually getting weaker just could put us further towards headwinds for Ethereum's price. Moving on to Will Clement's on-chain, which is just specifically Bitcoin. He had some similar things, but as Glassnode again, but the things that stuck out to me, first being that it's important to remember that Bitcoin and crypto in general are global international assets and markets. And so on the top left, what he's showing here is you could see the different premiums for different parts of the world. He has them all grayed out except for Asia. So what you're seeing is the Asia premium. Like I said, this top left is the Asian premium chart, where the deep blue in the bottom is discount, deep blue in the top is a premium. Basically just showing that over the last kind of 2 years, the Asian markets have had a tendency to front run the moves. And there is a deep premium right now where they've been buying up the most since kind of July last year. From there, moving on to the right, now that we kind of had the dust settle from Luna and the blow up of UST, we can kind of take a look at these whale holdings again. I know there were some questions last week about what exactly has been going on with the whales, how they've been selling. So now that we've kind of had some time for things to clear out, we have been able to kind of filter out specifically, if we take out all the 80,000 coins that were sold into the market by the Luna Foundation Guard, that we could see the effect was much, much less than with those coins. The spike was much less, and the drop down wasn't nearly as severe from this recent selling. And then going to the bottom left, we can see that the coins that were dumped onto the market were definitely soaked up by retail. You have this green line showing the percent of supply of all the supply owned by entities with less than 10 coins has moved up significantly. And then also the really big spike in the blue, which is the 7-day change in total coins held. And then lastly, moving over to the HODL waves, basically the different waves show the different colors of holders, how long they've been holding. And what Clement went ahead and did here is he removed any coins that haven't been held for over a year. And so it's only showing ages that have been held, coins have been held over a year or longer. And you could see that we've hit an all-time high where now 65% of the coins in the supply have been held for over a year. So that is going to wrap it up for today's on-chain.
So the volatility side of things this week. So you look at realized vol on Bitcoin. Bitcoin and Ethereum kind of showing the same picture here on realized, right? So you can see absolute collapse in realized as the big crash, as the lunar crash, let's call it, as that moves out of the sample set of the 7-day realized, it moved from 140 back down to around 60, the realized basically, right? So, 140 is like an average of 7% a day. 60 is like an average of 3% a day, basically, right? In terms of how much things moving on a daily basis. So you can see that collapse there in the blue line. The implied vol, on the other hand, priced that early, right? So whilst that realized was hanging up there at 140 and including the crash, the implies are already down at 70, 80 because they knew that was going to come out and the market had stabilized. So the implieds tend to lead us on the way back down after we get a crash like that. And that's why they've been much more stable and they've just been hanging in there around 70 odd, right? Similar, you can see that in the volatility cone where you see different tenor realized vols and where they are versus on a percentile rank going back a year. So you can see there's this little hump here in the 14-day realized because that encapsulates the crash basically, right? And so all those numbers, the longer term numbers are gradually going to come back down as that observation falls out of that sample. And that's why you can see in the short end ones, 1 day and 7 day, they've already started to come back down basically, right? So it kind of gives you a couple of different ways of looking at the realized vol there. Yeah. Okay. So yes, anyway, market stabilized, been range bound, no surprise, realized it's kind of fallen off a cliff. Yeah. If we then have a look at sort of what the term structure shape has been doing. So, you had a little bit of inversion still a week ago, and that's kind of all been taken out now. So the blue was a week ago, the pink's now. So there's much more of a flatter term structure if we kind of exclude the next couple of days. It's much flatter, and that's just makes sense. Again, that's what normally would happen when you have a spike, you go into backwardation. To hold that backwardation requires a persistence of the realized vol, right? It requires the market to keep moving. And the fact that the market hasn't really kept moving, that stuff then collapses back and is on its way back into contango, most likely. Yeah. What's really been impressive is the speed of the vol reset, right? I mean, you would have expected a vol reset after the crash, but I think it's been amplified, right? If we look at the chart on the right, and you just see the spike to ridiculous highs that we haven't seen in over a year, and then straight back down within like a day or two. I mean, that's insane. And it's catalyzed by the fact that the DOVs just keep coming, right? The DOV flows, that TVL hasn't gone anywhere, and it's just going to sell you gamma every week, basically, right? And the market makers kind of know that's coming. So like, why am I going to pay 140 vol when I can pay 70 vol? So they literally start smashing the vol down, get themselves shorter vol ahead of the selling flow, and then they soak up all the selling flow, basically, right? So that's kind of how it works, and it's definitely being amplified. The speed of the reset is definitely being amplified by those flows, right? If those flows weren't there, I would be pretty confident in saying that this vol would be at least 10 to 15 points higher than it is now, yeah? But unfortunately, I can't prove that. Yeah. So that's term structure and what we've been seeing there. If we then have a look at skew, obviously we had used skew as a pretty effective signal of when to cover shorts, but we didn't get as much of a bounce as I'd kind of hoped for, unfortunately. But looking at skew now, it hasn't really collapsed to quite the same extent as what vol has done, right? So vol's obviously mean reverted pretty dramatically back to where it was before the crash, but skew is still holding for most maturities, and I've got a green line there at -10, so that's 10 vols premium for puts. Apart from the 6-month maturity, every other maturity is still well above that level of skew, right? So that's saying that the street is very happy to still pay for put premium relative to call premium, right? So, and that's because the memory of the crash is kind of going to be there for a while, basically, right? And the reality is the macro headwinds that are making us bearish crypto haven't actually gone away. So there is a reason to believe there's still further downside. And we know that when you break certain key levels in crypto, then things can accelerate. So it kind of makes sense that people are anticipating more vol to the downside if we do head lower again, basically, right? Now, given that setup with skew being quite pumped still, ratio put spreads in general, but ratio put spreads especially look very interesting for those willing to sort of play a moderate move down, maybe into the 25K region over the next few weeks. You're getting quite nice break evens if you structure that via some sort of put ratio to the downside, given that vol's got crushed and skew's quite high, right? So that those are the sort of structures that could make sense if you've got the stomach for it, shall we say? Yeah. Calls look cheap, but be careful on that. Make sure you don't size it too big that it's going to liquidate your whole account, right? Because being short that downside tail can be dangerous in crypto for sure. Yeah. Because your collateral is losing value as the market's losing value. That's the key point there. If you also look at the call side, you're getting a bit more bullish longer term, then clearly calls look good value on a relative basis to puts, right? So 6-month stuff, you still got the skew nearly at 10 vols for puts. So 6 to 12-month call options are pricing pretty nicely, right? So that's something you might want to look at if you are bullish, but personally I'm not. If we then go and have a look at what flows we've been seeing, starting with Bitcoin. So still slightly skewed to the put side, not by much, but 58-42 kind of skewed towards the puts. If we look at kind of what the big clips are, we saw an opportunistic buyer of 32,000 calls in May expiry. So that'd be for this Friday. We've got the big May expiry coming up. We've got 10th of June strangle buyers. So after the vol got whacked into the DOV auctions, That's when the kind of opportunistic funds who like to trade gamma come in. So that was a gamma buyer in the 27K, 33K strangles for the 10th of June. Makes sense they didn't buy the actual weekly and they bought like 2 weeks out, basically. So you don't get caught up in the thing that is getting crushed the most and your decay is at the absolute maximum. Then you've got some put ratios. As I mentioned, put ratio is quite attractive if you want to play sort of a directional move down that's not too dramatic. So we saw a decent clip of June, 30,000, 25,000 put ratios, again, being bought there, right? So those are kind of the highlights. We also saw some deep downside, which I didn't highlight, on the 20K strike across the shorter dated maturities, looking like some potential crash protection buyers down there. Yeah. So that's kind of the Bitcoin flows. Now, I would say the more interesting flows this week and the chunkier flows this week have been Ethereum. And what's been going on there, again, is upside, right? People looking at upside. Now, we have been sort of flagging little clips here and there of upside over the last few weeks, right? But here, if you look at some of the volumes that have gone through, they're monstrous, right? We're talking in the size clips of like 40, 50,000 options. So what's going on here? So first of all, you can see the long-term vols quarter bid, right? So a week ago it was at 77. Now it's like something like 80, 81. So it's caught about a 3-4 vol point bid on the back of this flow in the longer part of the curve, right? And some of that may also be with the idea that, you know, Vitalik confirmed timing on the merge and stuff like that, right? So people want to own the optionality further down the curve. That's one thing. But in terms of these flows, the trades that people have been doing are these really quite tight call spreads, right? So in December 22 and March 23, they're trading 500 point wide call spreads. So they're buying the 4,000, 4,500 call spread in December, which is the pink. And they're buying the March 23, 5,000, 5,500, or the 5,500, 6,000. So 500 points wide call spreads, right? And these are basically similar to the digital structures that we've talked about in the past, right? Something that, what's his name? Leitner, Jim Leitner, I believe, talks about these. So these tight call spreads further out in the future effectively are like, they're like bets basically, right? They're like they're called European digitals, right? And what they're basically saying is, what is the price of that call spread divided by the value, the max value of that call spread? And that tells me the probability being priced in by the option market that we could get there by expiry. So these things are pricing at roughly 4 to 5% probability. So you're spending $20 to $25 for something that if we go there could make $500, right? So it's a pretty decent payout, right? It's pretty much close to a 20 to 1 payout. The type of size these guys are doing, they're spending like $1 million premium. So spend $1 million premium, forget about the trade. And if we end up above your top strike by that expiry date, you make 20 million basically, right? So those are the type of bets that people are putting on, and that's how they're constructing those trades. I don't think it's bad, right? I think, you know, for people who believe in the merge, who think that, you know, the bear market's going to hit lows sometime in maybe June, July, as it all gets priced in that the Fed can't do anymore. And let's say we get a pivot sometime, I don't know, September, plus you get news of the merge, it's possible. Stranger things have happened, right? And if you're being offered a 20 to 1 payout on it, it's not the worst trade in the world. And the nice thing about these call spreads, unlike the ridiculous calls that were being pitched last year in March, the 20,000 strikes, or whatever the hell it was, those things bleed like a bitch, right? They decay, they're on a high vol, and in 3 months, when nothing's happened, they ain't going to be worth anything, right? These call spreads, on the other hand, whilst there'll be some decay on them, they're going to decay much better, right? Because you're buying a strike and selling a strike, right? The probability is low already. The probability is being priced at 5%. Maybe the probability will drop to 2 or 3% if the market stays here for a couple of months, right? But the point is there will still be some probability there. And these things will still have some premium. All right. So I don't think it's the worst way to express that view. And I can see why people are doing it and just sort of highlighting that flow to you guys so you understand what these more sophisticated option players are doing in the space. Yeah. All right. That's it from me on crypto. Over to you for any questions. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.